What is up? What is up? What is up, folks? Welcome on another episode of Personal Finance Series. Today we are talking about stocks and stock markets, shares, and all that jazz. Private market, what is Nifty? What is NSE? What is BSE? We're going to talk about all of that, but say hi in the chat if you're joining in. Make sure you hit that like button. And hitting that like button really helps because it lets other people know. It lets the YouTube algorithm know that all people who clicked on the bell icon should also get a notification. Yeah, just hitting that bell icon is not enough. Like, you're going to let YouTube know this is interesting enough. All right, so today we are talking about stock markets, and let's start right away with the question: what is a share? What is a stock? Let's know your answers in the chat, as short, as simple as you can make it. Let's hear it. Let's hear it. What do you understand so far? And if any questions you have related, we're going to take all those as well. So I'm gonna get into now that I have said hi. I can get back into my um, legible self. And if you haven't checked out the new reel and the new episode of Spill the Beans, you should check it out on Instagram. Make sure you follow me on Instagram and Twitter and etc. 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 We're gonna get started right away. I'm super excited today to talk to you, all of you, about stocks. I've been waiting for this for a long time. So if you're new around here, make sure you're subscribed as well. And we're starting right away. So what are stocks? No highs in the chat. So silent. Why is it so silent? Just say hi in the chat. It feels nice. So what are stocks? Why is it not working? Don't tell me my Apple Pencil is not. It is charged indeed. So what are stocks? Or shares? They are, so far in our language, the same thing. A share is a share in the company, basically part of its ownership, probably. Perfect answer, Anurag Folio. And welcome to the stream. Sab Changasi, Rohit Medwani, Sab Changasi. All right. Arsh says hello. Hello, Arsh. Good to see you all here. Good to see you all, yeah. All right. So shares and stocks, right, are like Anurag said. And we have more answer. Amit says, let's suppose I want to open a gym after 15 years. What advice would you give me? Money, stock market, it's very expensive, the expensive place, equipment, team. Amit, that's a question that is slightly off topic for now, but we'll try to come to that. We'll see if we can talk about it slightly. Now, Sonder Reina says, hey Sid, I finally found you on live and I was about to catch you on a design live, but I got you here. Glad to be here. Glad to you are here as well. Super nice when people finally catch up. And let me know, Sonder, if I'm not butchering your name. How did you find out about me? That'll be awesome to know. Anurag Folio says, so we will be talking about portfolios yet again, but this time it's a different kind of portfolio. Look at who's cracking smart jokes. All are making smart memes. Speaking of memes, I posted a new meme template on Design Memes channel on Discord. So check it out. Let me know what you think. Pinaki is here. Hello, good to see you here. Yeah, welcome back. How are you doing? Amit says, I want to open a gym. All right, we got that question. We're going to cover that later. Rohit says, company provides some of their part to public. All right. So we're going to start covering this. Now, brilliant answers. Now, coming to Anurag's answer, which is closest here, that let's say you start a business, right? You start a shop. Now, you are 100% owner of the shop. But let's say you do partnership. So you own the company 50-50, right? But let's say there has to be like even more partners. And that happens with big companies when you get investors on board. So they're all taking ownership in the business. So that is correct when you take a part of the ownership, probably, right? So instead of splitting it into percentages, what you do is you split companies, initial capital into shares, number of shares, and you assign each share a face value. And that is the share value reserve that they have. This money is usually used up in startups, in some places kept as reserve. We'll talk about those nuances way later in this series, but right now we're gonna keep it simple. So that is what. So shares are like multiple such shares build up the ownership of the company, right? So now let's say because there are 10,000 shares, there are 10,000 at least possible owners that can be there, because at least an individual has to own one share. And further, what you can do is split that share further, right? So let's say they deposited, the company started with rupees 10,000, and each, 1 rupee was the face value of each, share, face value of each share, and that is how you had these number of shares. And I can split that, and then the face value will change to 50 paisa, right? Each, and I will have 20,000 shares. So I can keep on doing this Many companies today will start at 5 rupees, 10 rupees, so they can keep on splitting it, and it's gives you a lot of flexibility in terms of ownership, how records are kept, etc., etc., etc. So that's essentially what a share is. That's the correct pronunciation. Awesome, awesome. Glad to have gotten it right. If we are working in a startup, can we ask to convert our pay into startup's equity? It's not that you can. Often it won't be possible to convert 100% salary into equity, but yes, you can negotiate more of equity when there's a raise or when you're getting salary initially. More of a equity compensation and less so focus on the monetary compensation. So that's a possibility. Udit Shakya joins the stream. Welcome, Udit. Good to see you here. So coming back to ownership, and this is how shares work, right? This is essentially you have this company, and on which there are shares, and they are owners of these shares, and these are also, you can call them owners for sure. That is one, and in technical terms we call them investors, right? Is that how investors is? Investors, right? Yeah. I don't know why I was spelling it with O. I was like, that's definitely a spelling somewhere. It's investors, it's not investors. All right. Coming to the main thing, that now what happens is that shares can be bought or sold. In fact, company ownership can be written, like we were talking about the 50% ownership basis that we were example we were talking about earlier. What can happen is you can add another partner. Let's say I bring in another partner and I split 25%, and the same thing you can do with shares, that one owner can sell to another person, and that sort of deal can happen, and you can change the investor can change hand. They can partially exit the company, and that is what an exit is. An exit is taking exit from the position you have in the company. Position means you own some shares, and all these terms are important because we'll be using them going forward as well. But don't worry if you forget something, we'll revise them as we go forward as well. So taking an exit means selling off all the shares that you have. So you can take partial exit where you sell maybe only some percentage of your shares, maybe 50% of it. You had 10,000 shares, or 5,000 if there was if you were 50% owner, and you sold only 2,500 shares. So this sort of scenario will emerge. So now this selling and buying can be either in private market or public markets, right? Can anybody give me examples of what kind of shares get traded in these? Any examples? Anything that comes to your mind? Let's hear it. Let's hear it from the chat. Let's hear it. Meanwhile, I think there is a lag. I should be running these streams on the gaming setup that I do of ultra low latency, and today is definitely a bad. Investors is a British spelling. Investors is a British spelling, right? It is, right? I hope so. I hope you're not. I hope not you're trolling me. IPO in public. All right. All right. IPO. All right. That's a related word for sure. For sure, that's a related word. Cool. So we'll take it on. So now, private, typically startups, right? And small businesses, MSMEs, these are all sold and bought in private market. So when VC firm invest in a startup, it's actually buying shares in that company, but that's happening under private market. It's not like they can go ahead and sell those shares tomorrow, right? Sell those shares tomorrow. That can be a tongue twister. And in public companies, these are publicly owned companies, publicly traded. You can trade them on a stock market, and we'll come to that right now. And these happen like via registrars, etc., etc., etc. Now, this happens on what we call a stock market exchange, right? Exchange is how they're called in short. That these are, for example, Colgate is a company, right? Now, Apple is a company that gets traded on public markets. Then there is, what other examples are there? GameStop. How many of you want to know what happened with the GameStop drama? Heard about that? Funding by VC, an example of private, I guess. Correct, Arsh. Correct. That is correct. So exchanges are the one where this exchange happens, right? Somebody wants to buy, somebody wants to sell, And this, so when you're buying or selling a share, the transaction that is happening is back and forth is happening in the stocks, the shares, and the money, right? Because you're buying, you give money to buy shares. So the person selling receives money, and all of this happens on stock exchange, right? Of which you will be member through a broker. Now, what are the examples of stock exchanges that exist in India? Let's quickly hear the answer in the chat. Let's see who gets it first. What are the two biggest stock exchanges in India? Short selling by hedge fund in GameStop. Yes, yes, yes. That was a fun drama. Can you explain what is stock market in simple terms to newbie? Yes, this is exactly what stock market is, right? If I want to simplify it further, like we talked about shares, you understood once what shares are. If I want to buy and sell, buy or sell, right? Shares of a public company, then that's our public stock market, right? That is what happens on a stock market. NSE, BSE, NSE, BSE. All right, Anurag Foley got it first, then Arsh, then Ganesh. Hello, good to see you here, Ganesh. Welcome back to live streams. All right, so that is what I hope, Sandra, that cleared it up. What a stock exchange is, right? You buy or sell public company. You would have often seen company names are like something something private limited, right? So this tells you that this is a private company, right? The stocks of this will be traded in a private market, not on a stock exchange, right? And then usually the public companies end their name with just limited. What the limited etc is will come to it when we, that's not part of personal finance. Sure, why not, can be, but we'll come to it. Limited is typically like just a limited company, like a public undertaking. So now coming to stocks exchanges, NSE, BSE are the biggest examples. NSE has about, I think, 1,600 stocks registered with it, right? I think about 1,000 odd are traded every day. And BSE is the biggest exchange in India. It has about 8,000 companies listed, 8,000 companies whose stock are available, are registered with BSE. And about 3,000 odd are traded every day, right? So trading happens in roughly 1,200 or 3,000. I've forgotten the exact number for NSE, but roughly around that. So this is not all shares are bought and sold on these exchanges all the time, right? And you don't directly go to NSE and BSE. It's not like you can go to a market, right? You don't actually go to NSE building and buy the share from NSE office, right? So far, I thought it was just an addition to the company name. Yeah, it has a meaning. Now you know. Every day you learn things. That's why you should come to these live streams and hit that like button and make sure you're subscribed. Because analytics tells me, and I'm gonna do it, I'm gonna say it. Analytics tells me that majority of you are not subscribed, and I do look like a champu today. What could we do to improve this look? Nothing actually. So that nothing can improve a face. All right. After self-deprecating humor, we'll come back to NSE and BSE. Now, the thing is, a lot of stocks get traded and bought and sold. Now, there is no. How does price of a stock get decided, right? Usually, you would say, oh, we had price here, right? Because you paid 50 paisa or 1 rupee because there was so much reserve, etc. But that's not the price they get traded at. That's the face value of the share. The trading, the purchase, the buying price, selling price of the share is different and depends on the company valuation. So company gets registered with these exchanges, right? And their shares are traded there. And shares have certain, value because of the company's valuation. So each, you can say that if each share is valued in the market, let's say face value was 1 rupee like earlier, but if each share is valued at rupees 10 and company has 10,000 shares, then it is 1 lakh, right? This is 1 lakh. Yeah. So this will be what we call the market capitalization of that company, or the valuation of that company at this point. So now this is the market cap. So this is how all these terms, fancy terms that you will hear, and this is what it means. So when investors buy a share, the same thing happens, right? They buy, let's say there are, let's say 10,000 shares in a company. An investor buys, let's say, 5 shares. They, let's say, buy the next step they do is they buy 5 shares for a price of what could be the price? Let's say they buy it for 1 lakh, right, each. So that will be 5 lakh for 5 shares, right? What is 5 of 10,000? What is the percentage? That is the percentage of ownership they got, and you can multiply 5 lakh by that value to get the valuation, etc. How do you get to the valuation? You get the math. You can. I don't want to get into math right now because that's not. We have a lot to cover. But if you really want me to, let me know in chat, and I will come back and cover the math. But or you cover the math and tell us content, folks. You tell us, and what is the valuation? If this is if an investor bought 5 shares for 1 lakh each, that means they paid 5 lakh to own this much percentage of ownership. Then what is the valuation of the company, right? All right. So that's what we're gonna do. All right, that's what we're gonna do. Now coming to the funny bit here. So what can essentially happen? And I think DHH, very popular in the programming world, and part owner of the 37 Signals business that runs Basecamp software. He once, I think, tweets about it a lot. Like, so let's say you create a company with ridiculous amount of shares. Let's say 10 lakh shares. All right. That is 10 crore, no? That is not 10 lakhs. That is 10 crore. Okay, that is, let's say. And I buy 1 share, all right, of that entire thing for, let's say, 10 rupees. I give you a nice valuation. I buy 10 rupees. And the company valuation suddenly becomes 100 crores because you multiply that by that many shares available. So to get valuation, that is why they say like valuation don't matter, because there's so many factors like how much money was raised and etc. How much dilution was there, because it is that easy to get a valuation of like 100 crores. 100 CR will be a valuation. So if you want something that valuable on paper, just one transaction is enough to value it. But in the market, it wouldn't sell for that much, right? So investors have to be realistic about all of this as well. Did that blow your mind? If you did not know that, if that's something you learned, write boom in the chat so I know that you're enjoying this and you're learning something new. And hit that like button if you haven't already. So that's how valuations work, and that is why just when you talk about a startup's valuation, there's nothing really valuable that you're telling me, ironically. Now we come to something called, thousands of companies, like we mentioned, are trading every day. The depth of the market in a mature market like US, where stock markets are older, would be deeper. Like the number of stocks that trade every day there, and the volume that trades, and that amount of money that trades is higher, definitely. And I'm not seeing boom in the chat. Everybody knew that? Everybody knew that about valuation? Very interesting. Maybe there's a lag. I don't know. But will be nice to hear some answers. So coming to the next topic that we have, thousands of companies trade. But how do I know if they say, you would have heard the term, the stock market is going up or the stock market is going down. What does that mean? I mean, a share can go up and down, right? Individual shares. But there are like thousands of shares trading every day. So what does it mean for market to go up and market to go down? Arsh knew that already. Arsh knew that. Arsh is smart. All right, let's hear the answer for this. What does it mean? What does it mean? What does it mean, folks? Meanwhile, if you haven't checked the new reel on Instagram, check it out. Let me know what you think. Should I continue that series? It's Business Value of Design. New content is coming. I'm not very happy with the angle of that camera. Bull run and bear run. Okay, don't know. In my valuation is a feeling. Valuation ek soch hai. Definitely Anurag Folio. Definitely. All right. So, all right. Coming to now, you would have heard these terms, Nifty, right? And Sensex. For any server connection interrupted. But why would that be the case? Very strange. All right. Anyway, who has here heard these terms? Don't worry, this is still safe for workstream. Sensex is not a bad word. Mahalate OP, Anchit. Mahalate OP, not just late, Mahalate. So what happens is, not all these stocks get traded equally, even the traded ones. Majority of them will see like 1 to transaction 10 15, right? There's a power curve, power law. Many we have talked about power law. I should make a video about just about power law. Write power law in comments if you want to just watch just one video. We want me to make one video about power law because it applies everywhere. So there'll be power law distribution, right? So they will say, let's take the majority of these traded stocks, the top amount of traded stocks in terms of volume and by valuation, etc. There are some certain criterias, and Nifty has various. The top popular one is 25. I think Sensex popular one is 30. There's Nifty 50 as well. So what it does is it makes an index, right? These are called indexes. So it makes an index out of the top 25 stocks, and they keep changing it every now and then, and they keep publishing. You can actually Google and see which are the stocks in Nifty 50 right now, which are the stocks that are part of Sensex right now. And then they track the valuation of these companies together. If one company goes down, another one goes up, the valuation kind of remains the same depending on how much it is. So, some keep it, I think there are some indexes with just equal distribution to all, but there are some with give weightage to each company as well, depending on several criteria. So that's how an index is created, because the top traded 25 companies by valuation and volume will tell you overall where the stock market is moving. That is what they mean the stock market is going up or where stock market is going down. Power law. So Ganesh wants to see a video on power law. All right, Ganesh. Anybody else wants to see a video on power law? Let me know in the comments. Correct. Collective performance of all companies which are tied to the index. Correct, Anurag. You got that right. Nifty is of top 50. All Nifty is top 50. I think Nifty 50 is top 50. I think Nifty itself is 25, if I'm not wrong. All right. Correct me if I'm wrong there, Arsh. All right. Now coming to we talked about NSE and we talked about BSE and we talked about the indexes, right? That is one way to track the market, but how do you trade there? We saw companies list their shares with etc., right? And that is correct. I think Ash has told us that in terms when you go from private market to public market, we'll talk about going backward as well. But most companies prefer, the goal is to go public. That is what an exit for all the VCs and angel investors in a startup would be if it gets bought over by a big company or it goes public, in which case they can sell the shares in the public market. And when it goes public, that event is called IPO or is called initial. Is that initial? No, that is not. Initial. That's not initial. I think that is initial. Public offering. Right? There can be FPO as well. Follow up public offering, I think it's called. But that is out of syllabus for today's stream. You can take a company private by buying and giving an offer to majority of the public stakeholders and taking the company private and delisting it. The process for which it rarely happens, but it has happened. For example, one of Baskin and not Baskin Robbins. I think the company behind the cherry shoe polish. What is it called? Hankett and something. That company. The bunch of companies have done this in the past. They have gone private in the market. All right. Now coming to some of the companies that are big that remain private are like Patanjali remains private. It's not IPO'd yet. Haldiram's remains a private company. Paperboat is a startup that is trading. So too many food FMCG items, but yeah, you get the drift, folks. Now coming to how do you participate? So there are two kind of investors that participate in the market. So they are investors. When you buy ownership, you become an investor in the company. Now, there are two kind of investors that we see in the market. One are called retail investors and one are called institutional investors. I'm going to just write that faster because just too much time. Now, retail investors are people like you and me who buy small amounts of share for small prices, right? Institutional investors are like banks, companies, mutual funds that buy large tons, like they have massive volume of money. Private funds, private equity funds, etc., right? That buy stocks from the market. Now, how do they buy this, right? You can't just go, like I mentioned earlier, you just can't go to NSE, buy 4 kilo stock de do, mere paas paisa hai. You can't do that, right? You can't just go and buy like a shop. Instead, what you do is you talk to a broker, right? So there's a layer of brokers. There can be layers of brokers, but we'll keep the layer simple for our understanding because fundamentally that's how it works, that there are brokers, right? What brokers do is connect you with the exchange that we spoke about, right? This exchange layer. And before we proceed further, let's hear from chat. Who is the top broker in the country now by the sheer amount of volume of retail investors? When it comes to retail investors, who is the broker? The institutional investors can be brokerages themselves, like a bank will have a brokerage in house. And Anurag Folio answers that question. Zerodha is the correct answer. So a couple of years back, ICICI used to be on top, and they used to charge a bomb. And now Zerodha has taken them over. Amazing innovation Zerodha has done. You should check out all the apps that we have done. Rakesh Jhunjhunwala. No, not the largest investor. I meant the largest broker. My bad. Largest broker. Zerodha. Zero Rodha barrier. Yeah. Zero Rodhak. Zero Rodhak. Yes, yes, yes. All right. All right. And you should check out the, Nitin Kaman's blog post, the founder's blog post. Brilliant, brilliant, brilliant guy. We can cover Zerodha's products like Coinbase, Quant, etc. All that stuff that they make in some future version of this live stream. And Sounder Raina, welcome to Being Citizens. Thank you so much for support for the channel. Means a lot. Means a lot. Thank you so much for joining in. And those of you don't know, you can become a member of the channel and support, and it starts as low as 79. We didn't keep it 69 because for obvious reasons. But yeah, it starts 79. That's less than what you will pay for CCD if this was not a pandemic. But you know what I mean, right? It's cheaper than Netflix for sure. Alrighty, alrighty. Thank you so much once again, Sandrana, for supporting the channel. All right, coming back. Anchit says, yeah, cover how to set up and what to look for. So that's gonna take a while, like how to find a company and etc. How that research is done. We are like far from that thing, and I don't know if I can. I'll have to find a way, and I should have given this disclaimer earlier. But whenever it shows 59. Oh, that's perfect. Sorry, we started 59, not even 79. We started 59. Okay, that's like cheap as hell. That's even cheaper. That's like me giving you a discount right now on stream. So go become members and support the channel with just 59 bucks only. All right. And now coming to, how do you value one warning, statutory warning. I am not a personal financial advisor or a SEBI certified financial advisor, and giving you financial advice is not the aim of the stream. Do your own research is always the big campaign. I think I should include that hashtag and that disclaimer in these live streams. I think the notice is already there. This is for me to share with you what I personally learned, so you can it can help you in finding a starting point to do your own research when it comes to personal finance. Now that we're done with the legal notice, let's get back. Please remind me every single time we do this live streams to give the legal disclaimer. Now coming to Zerodha and ICICI, you go give them some documents, you open an account with them, and then you can trade and invest as well. And now there are two words that you will hear: trade and invest. We're gonna cover that in some future live stream for sure. How far are we? We have ample of time, so probably we can cover that as well. Let me know if you want to cover within this thing. Now, what is trading? What is investment? What are your views on it? Do you view these terms differently? And you, Anchit Banga, you can use small case app. Yeah, so small case is awesome. Small case is a brilliant example of innovation in this investor space. So these are brokerages. This is how the entire stock market works. Congratulations. If you didn't know, today you understand what stocks are, what stock markets are. And now there are some open questions. There are two directions we can take from here. Either we can talk about mutual funds, right? And open another Pandora's box. Or we talk about trading and investing and open yet another box. Like all directions from here are wild and open. And you folks make the decision on which direction we go in. So let's hear it in the chat. Let's hear it, which direction you want us to take. Option number one, write 1 in chat for mutual fund. Option number 2, trader versus investor, write 2 in chat. Let's hear it. Manish says, you didn't answer my question. How does a company divide shares, or how many max shares can a company has in total? It's up to them how they do this division. Honestly, I don't know of any technical limitation on this. As long as it's practical, how you divide it is up to you. It's the setup typically done, that is easy to modify later. and how many shares is recorded in the, what do you call that? I forgot the name of the document. The cap table? Yeah, the capital table. I think that is a cap table where all the records of how many shares, how who owns it, etc., is kept. Or maybe that's the informal term for it from the VC community, and I don't, I've forgotten the term. That's a good question, but I will get back to you on that. Mr. Beast says trade it's short term and invest is long term. Beautiful, beautiful explanation, Mr. Beast. That is awesome. Thank you so much. Runs on DC says, will you make this video private? I don't have any plans to make this video private unless I do some blunder on the stream. This video will remain public. 222. All right, we're going with 2. We're talking about trading versus investments. All right, all right. Need some water before we get started. And if you haven't, make sure you hit that like button. If you're new here, make sure you're subscribed. Now, what is trading and what is investment? And Mr. Beat, like he rightly pointed out, this is short term, right? How short term? We'll talk about it. And this is typically for long term. Here, you typically don't, you talk about often, it's not always, but often you in trading, you heavily rely on what we call technical analysis. And usually, not always, in long-term investments and investing, you rely on what we call largely fundamental analysis, right? And if you want to learn more about this, and I'm going to add link to this once. And by the way, the link to Rich Dad Poor Dad was already added in the last stream. If you haven't checked that out, part 1, you should check that out where we talked about basics of money. Now, you should read this. It's a very heavy book, The Intelligent Investor. It starts with, with the premise of trader versus investor. And this is where this basic premise comes from. The idea here is, if you're a trader, you will look at what Wall Street, that GameStop people were doing, just trading basis on like what the other person is doing, what people are doing with the stock. Then you are largely trading with the money. Short term could be like 1 day, couple of hours, couple of minutes in terms algorithmic trading, couple of seconds, microseconds, etc., etc., etc. But long term usually is at least 6 months and larger. And in my opinion, in terms of stock market, anything less than 1 year is like short term. And that's how law views it, at least. Any in terms of taxation as well, any capital gains, right? Because these are capital goods and these are gains you make. Any gains that you, any profit that you make by selling shares within a year, right? Less than a year is usually counted as short-term capital gains. Taxation also defines it this way. And I personally, so I align with taxes, but my view is even more hardcore. Like anything less than 5 years is short term in finance terms. Otherwise, compounding equations just don't make sense. But yeah, you can have your own opinion. But this is how tax treats it, like equal to or greater than 1 year, and we call these long-term capital gains. Yes, even finance has gains. Even finance has gains. So is your, you can ask your stocks if they even lift. Bad jokes apart, you also get awesome content on this channel. So make sure you hit that like button. Now coming to, trading versus investors, the tools and the way these people do stuff is vastly different. And typically traders, either the hobbyist traders are either spend a lot of time. This requires a lot of time, investment of different kind, and which is regular. However, of course, it's limited because when the stock market closes, you shut it down as well, unless you're doing some retrospective analysis or something like that, or you're doing algorithmic trading, in which case you're setting up or testing out some like algorithm. But these people, like, again, like, follow a very different, like, investors follow a very different kind of path. Here, investors will talk about things like what is, the margins of the business, right? How healthy is the revenue? How diverse is the source of revenue, etc., etc., etc. So these are the things these investors talk about. Will, of course, dive deeper into mindset of an investor, because I personally align with investment side more than the trading side. I'm not that experienced in trading, but if you folks are super interested in trading, I will try to bring in some people who have done trading earlier, and we can talk about specifics of that concept with them. So coming to investment and fundamental analysis is the word we used. What are the things that you will do? And by the way, if you're wondering, one of the popular, sorry, one of the people who do fundamental analysis and bite into this investor versus this thing, and are those who rely on. There's a specific thing called. Okay, let's go the other way around. You know Warren Buffett. Tell me what are the attributes used for him? What is he known as? He usually relies on fundamental investment, but there is a particular type of investment that he's called investor that he's called. What is that term? Let's hear it from the chat. By the way, tomorrow budget's coming. Topic for next stream in series. Maybe that's a good idea. We can discuss. We can discuss the budget. That will also make me go through it. If let me know if you folks wanna watch a stream on budget. I'll take some time to prepare for it, obviously, and we'll only talk about the things that relate to us, the tech community, and we'll highlight those, talk about those parts, and yeah, and we'll talk about maybe probably the impact in the startup world and how will those things get affected, right? And I'll have ample of other content. So if you are interested in watching that, that's a brilliant idea. Thank you for that. You did right budget in the stream. Budget review tomorrow. Value investing, correct. Anurag Folio is on spot. Is there a okay, we missed one question from Monish. Is there a difference between amount of tax on short term and long term gains? Yes, currently speaking, short term gain attract 30% tax rate, and long term gains made from equity have no taxation at all. Yes, you heard that right. No taxation at all up until crores or something like, but hey, no taxes at all. Yes, this is called value investing. And one of the founding things behind value investing is that you rely on something called as cash flow. What is cash flow? Any of you heard that term? Write yes in the comment section. And if you haven't heard that term, write no. And if you can explain it to us, great. Let's hear it. Warren Buffett is a long-term investor, correct? He's one of the longest long-term investors I have come across when it comes to long. Like, he understands long-term. Alrighty. All right. No, not about cash flow. Yes, in Scam 1992. All right, I have no awareness of this film. Whatever this film is. No awareness whatsoever. Alrighty. Cool. So we're going to talk about cash flow. Now, let's say you have the company model, that how Warren Buffett looks at it is really simple. All right. You have some assets, right? You have some assets, liabilities, etc., etc. You have some liabilities as well. And if you don't understand these terms, you should watch the first stream in Personal Finance series where we talk about the basics of the money. And if you haven't, what are you doing? Go check it out. Go check it out. So the essential model is that largely they're assets. You have this, which is essentially money, right? Practically speaking. And this business makes more money on top. Correct? This was your investment. Initial investment, right? And this was your return. Simple. Another way to look at it is you have land, which is an asset, which was bought with money. And each year you grow crops. You sell them and you get money or income or return. And this is what gives us the formula as well. Return on investment, or ROI. It's literally return on investment, the percentage, right? So he says, now, if you know the cash flow trend of the company, how much cash it makes, and if you understand that business, we'll come to circle of competence and all those ideas later on. Let's say you really understand how this business works, and you know that in the last 10 years, it has made this much cash flow, slowly growing, right? Now, practically speaking, right? Let's say this was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 years of data you had. 15 years of past reports you had. And these all reports come from your two items that we know. One is balance sheet. And the second one comes from your P&L statement, profit and loss statement? Is that balance sheet and profit loss statement? Correct me if I'm wrong, folks, but I think those are the two items that company publishes, and they publish this every quarter, and they publish it every year as well, right? So this is what happens at quarterly calls. You would have heard company quarterly call, etc. So this is what they're doing. They're releasing these numbers, and they get revised and frozen at yearly level, where they pay taxes as well. They continuously pay taxes as well, but these are when all the settlements finally are done at financial year closing. So now what you can say, like, I know the trend and I understand this business and I have some hypothesis that it's going to grow this way. This is how the market is evolving. So you can, based on your modeling, you can predict how much cash is going to be there in the future, right? Indefinitely. Let's say I'm going to hold this company till X amount of time. Let's say additional 15 years, right? And I say next 15 years, it's going to give me this much money. Let me change the colors for clarity. Green for money, and this is the money that I'm gonna get. Cash. This is hard cash, by the way. We're not talking about profits here, by the way, because accounting profit and actual cash earned, there's a huge difference. There's a huge difference, and Warren Buffett talks about hard cash. Okay, hard cash as in, you get the point here. क्या मतलब promise of payment nahi hai. It's not, it can't be like, oh, we rendered services, they have promised the contract is signed, but the payment has not come. The payment has to come. That's what he wants to count. So yeah, often looks at what we call, the cash flow statement to make these deductions instead of the profit loss, purely on the profit loss statement. It's a brilliant series about Harshad Mehta. Oh, right, my dad and my sister have been asking me to watch it. So this is your, what we call the future cash flow, right? And let's say this is X. Let's say this entire amount you calculate it to be, and you can have a range. You can say this is my worst case scenario, this is my best case scenario, so I take an average in between the two, right? And you take this amount, right? And let's term it X. And the amount that you need to put in money, right, to buy that share is, let's say, Y. So I'm gonna get X amount in next 15 years if I put in Y, right? Now to me, there are two parameters. There are two parameters I'll look at. What if I put Y in a safer investment, right? Right, let's say FD, etc. And FDs are a bad idea. Why they're a bad idea? We also talked about in the last live stream that we did. Let's say I say I'll put it in FD, or I'll just buy government bond, right? Government bond, and especially government bond because they are secure. On government bond, let's say I get 8% interest and I get X amount of money, right? This X has to be, and let's say this is Z, the amount of money I make from government bond. So X has to be greater than Z for this equation to make sense, because I'm taking risk in the stock market. Yeah, what if the company fails? Government will still give me money. Failure of a government is very difficult compared to failure of a company. The company may not exist in 15 years, the government will. So if I'm taking that much risk, the reward has to be higher than 8% than what government is offering, right? And that is why the Y amount matters, at what valuation you're buying it. The problem with stock market more often than not is all the stocks are overvalued. Like, the X you are gonna get on that Y, the ROI is actually lower than this percentage that you will get from FDs. Most people are just betting in that case that, oh, because somebody is paying more today, somebody will also pay even more premium tomorrow or 15 years later, and therefore I'll recoup the delta that is there, on the ROI. But that's speculation and not investment, right? So this is my first criteria, right? That you need to get me better ROI than my safe investment. So far, so with me? If yes, write yes in the chat. Than safer vehicle. Financial vehicles, they are called. My second criteria would be, right, that the X has some certain value to me, right? X plus Y has certain value, and which reduces in future, because remember inflation. So this much money in future may not be as valuable. This money today may be more valuable than that money in the future because of inflation. So now what I do is I discount this by inflation. I take past 50-year inflation trend and I assume it extended in the future, or different methods and models you may have. And then I come to a new X, which is called discounted cash flow or inflation adjusted cash flow. This is what Warren Buffett uses as his X. Not his X. Let's give it another number. Let's call it X discounted, right? So this is what you're looking at. Your S discount is what you're looking at. This amount, has to make sense. This has to be, this is what you're gonna look at. That how much worth is there for you. Now, what he in his entire book, Benjamin Graham, that he wrote, The Intelligent Investor, I'm gonna summarize it for you. And he summarized it in the last chapter. If any of you read it, go check it out. The last chapters are the most beautiful chapters towards the index. But it talks about this beautiful concept, and if you get it, it's so powerful, folks, that it's amazing. Like, I'm gonna switch the screens here because I really want you to pay attention. That it's so powerful. This is simple concept. Either it hits you or it doesn't. And I don't know how to make it more powerful, and it's as simple as it gets. This is all he talks about. This is all you need to think about when it comes to value investing. This is what value investing is. Buy a rupee for 90 paisa. Buy a rupee for 90 paisa or less. That's what value investing is. So what that means is, this is a rupee. Let's say in future discount, you earn a rupee. Now today, if you buy this future cash flow for anything, below 99 paisa, you already are making money, right? That's your value. That's and what he talks about and where the term value comes from. This is what value investing is about, right? This is brilliant. This is genius. And if you got it right, got it in chat. If you didn't get it, I'll try to explain it, but I don't know how. To simplify it further, you buy something more valuable for less valuable amount, right? That's immediate returns. It's crazy. Now of course, there are many things where something can be more valuable to you. For example, colors are more valuable in hands of an artist rather than what they are in a shop, right? So that is an act of value investment as well. But that is the basic principle. Now coming when it comes to money as well. Now coming to the term value investing, where the term value comes from. Where the term value comes from. The idea here is that this model that we looked at, land produces crops, that it says, remember, intrinsic value. Intrinsic value, right? So he says that the intrinsic value to land, and there's intrinsic value to the company, and this value is calculable in form of discounted cash flow. And then if you are able to buy it for cheaper than the brand premium, etc., put together. Of course, how you value a brand is very difficult, but this is the basis premise that I value this company at X amount, and if I'm getting anything near or lower than that amount, I am buying it, boss. Right? All right, the people got it. Bilal and Udit Shaka got it. Awesome. And that is the concept of value investment, and that is how discounted cash flow works. And remember this model, that discounted future cash flow model, which is used by Warren Buffett. If you're gonna look for a formula, they have thousands of people that have thousands of formulas, but he prefers not to give a formula because it'll depend on finding the exact accounting term. But if you go deeper into different, India's accounting terms and what he's talking about, you can figure out largely what he's talking about. So, yep, this is largely how, at times value investor legit do this. The hardcore ones are known to not even look at the business. They just look at the numbers and go yeah, this is cheaper than it's worth. Legit, there at times companies have something called cash reserves. Okay. A company will have, this is hypothetical example, but legit something like this has happened in real life, in legit life. I have seen companies with my own eyes that were valued at that point. Let's say there's 1,000 shares. Company legit will have, let's say, 10,000 rupees in bank account. Which means there's 10 rupees for each share sitting in the bank. And let's say there is 1 rupee liability as well. 1 rupee per share they have to pay, something like that, because their liabilities are divided up to that. Let's say there is liability of 1,000 rupees, right? Which means each share there's liability of, that means there's legit 9 rupee per share that the company has. But the share price will be rupees 3. At times, I'm not kidding you, companies are valued, and it's very rare, right? Are valued less than, what the cash is sitting in the bank account. Like if they were to liquefy this company immediately, you will get 9 rupees, but it's selling for 3 rupees. And they used to like Benjamin Graham, the mentor of Warren Buffett and the guy who wrote Intelligent Investor, were known to invest in these. Back then when information was not so widely circulated because of internet and digital stock markets, they used to find these kind of investments and invest in them. And then when they used to get liquefy, they would like get better money, better return on their stock. And this was called a cigar butt, investing as well. Why? Because it's like finding a cigar which is almost done, but there's one puff left, and you just like, and like just getting it there. Like you get a puff, free puff. The puff is free, but like, like who wants to do that, right? So Benjamin Graham was that kind of person who will literally go on for this. The cases today are very low. This only happens when legit what investors are saying today is like, you will lose that money as well. Like what their vote is saying in the market is like, 9 rupee in your hand, in this company's hand, are worth 3 rupees. So that's quite an insult, to be honest. Or there can be multiple reasons to value that, because the company really is doing something else. GIF incoming. Which GIF yaar? Kaun se GIF ban gayi? Like which GIF is it? Like cigar, but oh that one. Oh shit. Oh shit. Oh shit. What have I done? All right. I brace myself. With that, we come to an end of today's live stream. How did you like it? Did you like it? Hit that like button and write boom in the chat if you learned something new today. And let me know what was the new part. If there are some questions you would like me to cover in the next episode, let me know, write them in the comment section. If you're watching it later, write them in the comments. And if you're watching it right now, write them in the live chat. And for this kind of quality content, like you gotta subscribe and hit that like button. And what other things do you want us to cover? What other things do you want me to cover? Let me know. Let me know in the chat, folks. Let me know. And if you don't follow me on Instagram, I don't know what are you doing, because we're doing crazy stuff there. Naman is here. Hello, Naman. Thank you. Glad to see you joining live for the second episode of Personal Finance. I just saw your comment before starting this one. Thank you so much for the comment. We're going to cover ESOPs soon. Like we did speak about what private market is and that startup shares are sold, and we're going to cover ESOPs in a future episode for sure. And this was a great stream, especially the concepts of value investing. Thank you so much, Anurag, for you. I'm fascinated by value investing, and we will dive in deeper. We can actually, in this personal finance series, we can actually go through letters to stakeholders that Warren Buffett writes each year. That could be a live stream, and that could be actually 5 live stream, because they are dense. They are like some dense thing to unpack in there. You are late, Cypria, but no worries. You can, this live stream is available. It's going to be public. You can rewind and watch it back. All live streams are available. You can watch them back, play them again. If there's a concept you're interested in, play them back while you're watching something, King's Dhar then chill. Oh, no, that didn't sound right. Oh, shit. Don't make a gif out of that. All right, that was great. Hit that bell icon. Yes, hit that bell icon already. Is the winter gone? Yes, in Bangalore, there was never winter to begin with. That's why I'm wearing like half sleeves. And I feel like my muscles are all gone because I've not worked out in a month. But my trainer is coming on Wednesday, so I'm super excited. And that's when I get to shoot my day in life of a UI UX designer. Should I call it day in life of UI UX designer, or day in life of head of design, or like which title is preferred? I don't know which title. Posted a meme on Discord. Check it. All right, gonna check it right away. Okay, all right. Udit says, who will tell you about these companies with more money in bank and less value? You have to find them out. They're legit things, queries you can put, and we can talk about Ticker Tape, the tool that I love to, that I have used in the past to do that. And then we can, do that sort of stuff. Cypria, show you what, Cypria. Head of design, day in life of head of design. That's what I should use. Please vote. It'll really help me. Help me put the entire narrative together. That's what I want to do. I mean, I want to make a multiple series of those, but head of design. Day in life of king. That you folks will click on, other people will not. Hello, Balaji, you're super late, but no worries. Rewind it back and watch it back again. We talked about stocks and stock markets. Your gains, yes. My gains right now are not showable, but once I start working out again, the gains are going to come back, because right now the muscle toning is completely gone. But hey, something is there. Not bad. All right. No, I'm not showing it right now. Go check out on Instagram. All thirst traps on Instagram, not on YouTube. Actually, workout blog is coming on YouTube. Soon, Cypria, soon. It's going to happen soon for sure. Life of King is also nice. But only you folks will get it. Only you folks will. I'll post it on Discord with that title. Should we invest in Future Group? Its share price are low at the moment. No personal stock advice on the channel because I'm not a SEBI certified financial advisor, and giving any stock recommendations would be illegal, literally illegal. Like I can be taken and put to jail, I think. So I can't give stock advices, can't recommend stocks. But if you believe something is undervalued, that's precisely the time to buy those things. OG designer and personal financer. Oh right, Naman, thank you so much. Post gym pic on IG. I don't go to gym. I have a workout place at home. So once my trainer is back, more workout pics are coming. I mean, that's good content. I really like working out, and I just like that my trainer likes to click photos, so it works out well. It's free content for me. I just have to work out. And there's more, this thing to platform on which you invest. I use Zerodha. All right. All right. With that, we come to an end of the live stream. Thank you so much for sending out questions. If any other question that you have missed out, right, if you're watching later, let me know in the comments or DM me on Instagram. And if you don't follow me there, please do. Thank you so much for joining in on a Sunday evening. I don't know if I have energy to do chess gaming, but I want to do a chess stream sometime very soon. I want to invest in to YouTube channel and get a share of ad revenue. The ROI may be too low. The ROI may be too low. Even biggest creators don't rely on ad revenue as their biggest, this thing. Scam 2021 on the way. I don't know what you're talking about. I don't know what you're talking about. All right, all right. With that, we come to an end. Thank you so much for watching in. Good night. Shabak Khair. Shubh Ratri. Love you. Marry me, etc.